Welcome back for our final daily report market analysis videos of Thursday, the 26th of March with me, Richard Perry, market analyst at Hantec. We're going to look at gold, and I've been discussing in the last few days as to whether gold is starting to sort of lose its run higher, and it certainly has seemed to do that. Yesterday's candle was, I suppose, arguably, you could almost call it a spinning top, but not really. Long lower shadow, bit long upper shadow, probably too much for that. But certainly it suggests that a stalling in the trend has been seen. And what we are seeing today is a similar move, really. Threatening to the downside. Two intraday moves to the downside have been rebuffed so far. And it could suggest that the market is effectively just consolidating, really, and momentum indicators just beginning to sort of roll over. Certainly suggest that at least it's consolidation. And you can see here on the hourly chart, the market has basically gone sideways for the past 48 hours or so. But yeah, it's sort of threatening a correction, but never really got going. Picked up from around 1690 this morning. Sorry, 1590. And meant that this little near-term pivot at 1585 remained intact. The hourly momentum indicators still fairly decently configured, aren't they? RSI held above 40. Now, if it starts to go decisively back above 60, again, that would suggest that the market is starting to get some bull traction once more, because obviously the last two peaks came around that 60 mark and then fell away. So if it went above the 60 on the hourly RSI, then that would suggest a little bit of upside momentum starting to build back in again. But I think I look at this chart and I still think this is sort of consolidation territory rather than anything sort of. I mean, it could still be just a pause in the run higher, and I think obviously a closing breakout back above 1635 would determine whether that would be the case. Say, for example, RSI went above 70 on the hourly, then again, that would be sort of suggesting that we are, again, really pushing on, and above 1635 could easily be seen then. But for now, I'm just still taking this as a bit of a consolidation. Corrective momentum could still come in. And if that were to be the case below 1585, that would imply this sort of 1553, 1560 area as a downside target. But we are still holding on to this support at 1585 so far on gold and picking back up again. Resistance around basically testing at the moment 1619 area. It's then 1625. And then that's obviously underneath the 1635 reaction high from yesterday. But for now, as I said, basis of consolidation. But yeah, a little bit of sort of uncertainty with the big strong run higher, which has seemingly run out of a bit of steam. But if you, as I said, if you break out back above 1635, then well, that would certainly suggest that this is a little bit of a bull flag, and then you reopen the highs again. But for me, I'm not expecting that, but it'll be interesting to see how gold pans out in the coming days. But we still are buyers into weakness on gold for medium to longer term positions, which we can see going considerably higher once more. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.